Hi, this is Optimus Futures, and we're back with our weekly roundup of key futures markets for our viewers. We're literally round the corner when it comes to the holiday period for the year, and so naturally a lot of the markets, which are usually very liquid and very stable, are beginning to show signs of low volumes and volatility and a lot of sideways indecisive market action, although some markets continue to surprise us with the momentum that they're really taking forward from the prior months into the holiday season. We begin our analysis with light crude oil futures, as is usually the case. So this has been one of those markets that has been kind of stuck at a very long-term resistance level for quite a few of the prior weeks, and this week kind of continued on with the same momentum. So essentially what we're talking about here is this long-term resistance level right around here. We obviously had a very significant bounce off of this level in the past. Here too, as price approached it very rapidly, we saw an initial bounce off of this level, and price tried to retest this level, broke it temporarily, and really after then we've just seen price go sideways and consolidate at this level. We actually are seeing the development of a wedge pattern here, which you're going to be able to see a little bit more clearly when we switch to the lower time frames, but we're very clearly just heading into a wedge pattern here as prices continues to chop up and down around this level, obviously indicating that at some point we're going to see a breakout either to the upside or to the downside. But given how we're at such an important level here, a real breakout, a sustained breakout, we assume will require a lot more volumes and liquidity in the market, and so we would really pin that breakout to be at some point during the next year, early next year. That would be possibly in January. For now, we just expect this market to continue to just chop around and kind of just tighten around in this wedge, and basically just prepare for a breakout to either side. So if we switch back to the lower time frames, the 2 hours in this case, we can clearly see the development of this wedge pattern over here. We already have 3 touches to the upside, and we have 3 touches to the downside as well, which literally validates the support trend line forming the floor of this wedge pattern, and the resistance trend line forming the ceiling of this wedge pattern. But as you can see, we still have a lot of space for price to be chopping around here for a while as we kind of just tighten into this wedge a little bit more. Zooming into the action from prior week, we really just had price bouncing off of this off the long-term resistance level that we pointed out on the daily time frame. Price kind of fell sharply down all the way down to this sort of mid to long-term support and resistance level. We obviously have very obvious indications of support and resistance at this level in the past, and so really no surprise why price falling so sharply into this level was going to bounce off of it as well. But once again, no real sustained moves at all in the market. Even though we had a bounce off of this level, we had a bearish engulfing candlestick print right over here as we literally just traveled right past this level, held up at this level only briefly until we dropped right back down again, closer to this more important swing low over here, and once again we see price bouncing off. So this is really just a typical sideways consolidation movement that you would expect of a market when it's caught up in a wedge pattern or at a long-term resistance level. And for this market, obviously both situations are true. So we really just expect this market to continue to be indecisive a bit, especially heading into the holiday season, which is typically expected with low trading volumes and increased volatility. But hopefully early next year, we do expect this market to be eventually breaking out of the wedge pattern and possibly post a sustained move in one direction. Okay, so next we look at the S&P 500 E-mini futures market. Now this has been a very interesting market to follow the prior week, and that was really because we were able to see this market repost the very, very strong upward momentum, which is kind of a surprise given the fact that we're heading so close to the holiday season here, which you would typically expect to be yielding moves like these, but instead what we have here is a very, very strong move up. So essentially we opened the week right around here at this level. We already had posted a new high the week prior to the last one, which is right over here. We kind of opened just underneath that level, and instead of really holding as resistance at this former high, possibly consolidate and just be indecisive with low volumes that you would expect of a market heading into holiday season, we instead have price literally just creep right past above this level. We did see a move right back down underneath the level, but really nothing much could be associated with the bearish strength here at all, and price was really able to repost the upward momentum more towards the latter half of the week. And once again, we've been able to post a new all-time high for this market, literally just 1 week before Christmas, which really just speaks volumes about the bullish trend that this market has been in, and possibly indications of the continued upward momentum heading into next year. And that will obviously be our bias as well for this market. Okay, so the next market we're going to be looking at is the Euro currency futures market. Once again, we just like to switch to the daily time frame quickly so we can give a bird's eye view of where this market is at from the longer term perspective. So essentially we've talked about how this market was able to nullify the bearish head and shoulders pattern that we had posted earlier here. It was very obvious. We had a shoulder here, a head here, another shoulder here. Price actually broke to the downside, breaking the neckline of the pattern, but since then it really hasn't been able to amount to any kind of real bearish push here at all, and we really saw buyers regain momentum. We saw a very strong candlestick close above, pull back, hold the support, just continue on towards the upside. But we did, in an earlier version of this series of videos, we mentioned how price was going to be restrained and constrained at this level over here, formed by the left shoulder, the base of the head, and the right shoulder, which is also sort of creating a very strong horizontal support and resistance level. And what we've really seen in the past couple of weeks or so has just been this very phenomena unfold, which is that price is really holding as resistance at this level. We tried to create an initial push out of this level. We failed. We tried again at this level around here. We failed again, and price has just really trickled back to the downside. And as you can see, we're kind of sitting at this another sort of important area, which was previously the neckline for the head and shoulders, but is obviously a horizontal support and resistance level as well, right around the 1.175 level. Switching back to the lower time frames, the 2 hour in this case again. Once again, like the crude oil market we discussed, we're kind of seeing a wedge pattern develop here as well. And typically it's kind of hard for a trader or an investor or someone analyzing the market to really be able to make it out as to where the market is going to be more inclined to break out off a consolidating pattern like this one, especially when price is actually inside the pattern like it's over here. But just given the fact that we're seeing a lot of bearish momentum build up on this market over the past couple of weeks, kind of makes us believe that price may actually eventually be able to break out to the downside of this level. It's not a bias as such, because like we said, it's kind of hard, and it's kind of hard for someone to know exactly where the market will break out of a pattern while the market is still in the process of creating the pattern. But just looking at the fact that we have this bearish engulfing candle with a very large wick to the upside over here, and simply the fact that this horizontal support and resistance level has been tested multiple times in the recent past. So we had this initial bounce over here. We had number 1, number 2, number 3, and essentially where we last closed the prior week is kind of the number 4th touch in very recent times of this level. And really, when price just keeps coming back to a level, it does not speak much about the strength of that level. And so just given the momentum that we're seeing kind of build to the downside, even though we're still in a sideways movement, we kind of expect the market to break to the downside eventually. once we're past the holiday season, and while we're just very close to the holiday season, we're not exactly confident of a very strong move to the downside straight away next week, although something like that cannot obviously be ruled out as well, as we've seen some of the markets continue to behave very normally despite the fact that they're heading into the holiday season. So it really remains to be seen how this market unfolds, but it's kind of getting very, very interesting given how we're just tightening into this wedge pattern here and all this momentum that's building towards the downside in this market. Once again, we'd like to repeat, we're not issuing a bias for this market to the downside just yet, given the fact that we're still consolidating, and of course we're heading into the rather dubious holiday season as well. But we just expect, or rather we should say, we wouldn't be surprised if the market breaks to the downside here. Okay, so the next market we're going to be looking at is the gold futures market. Now this is another market that we've in the recent past analyzed mostly on the higher time frames, because that's where this market kind of displays the price action in a more logical, easy to understand way. So for this market in the past, we analyzed how the market has been caught up sort of between a very, very significant, important and strong resistance level over here and the support level right around this area, which is less precise. We do have some bar lows kind of sticking down underneath the level, but really it still is a very important level, and we had discussed how price was kind of trickling down to this level. It had broken out of this really tight rising trend line earlier on, and we were talking about how the sellers were building momentum to the downside and hopefully looking to break this level. We did see a very strong break of this level as well, and despite the fact that we were seeing price kind of literally drop underneath the level here, we did caution last week when we were analyzing this market that we do not expect the movement to be extremely smooth. Even though there isn't a lot of obvious support and resistance levels as near-term obstacles for price, we did have a short-term level around here. But really, just from the first glance, it did look like price was going to make it easily down to this low over here, because we didn't have a lot of technical side-to-side support and resistance levels creating any kind of major obstacles and hurdles for price. But we did caution that just looking by the overall movement and the kind of mood that this market has been in over the past many months, it wouldn't really be a surprise to see price still kind of chop around despite breaking to the downside very strongly, especially heading into the holiday season. And that's precisely what we've seen here. We saw a bounce right off of this level, which is kind of just above the 123 round number, and price just towards the end of the week, the latter half of the week, we saw price kind of just rebound off of this level. And now that it's trickling back up, of course we expect to this former support level to turn into resistance if price is to continue its way down. On the contrary, if as price pulls back to this level and we do not hold as resistance and price just kind of trickles back above, then really we kind of destroy that hypothesis that price may eventually be pushing down to the 1200 or the 1210 level, which is right around this low over here, and we're really just evolving, or rather going back to the older mood that this market has been in, which is just sideways, choppy, and indecisive market movements. Again, a lot will really depend on how price kind of behaves as it pulls back to this level. We do, however, expect that this level should, technically speaking and typically speaking, hold as support, hold as resistance at this point, and allow price to continue its way back down. But really, with a market as sideways and as choppy as this, and with again with the holiday season closing in, really all bets are off. Okay, so the next market and the final market that we're going to be looking at is the 10-year Treasury note futures market, and this has been one of those markets that's displaying very typical behavior ahead of low volume holiday season. Once again, lots of gaps that we're seeing posted here. We kind of started the week around at this level and right around here. If I just create a quick divider, we do have the elements of basic price action still underway in the market. We do have price kind of bouncing off of former support and resistance levels, but at large, it's really just indecisive market movement and in action. Once again, you can see that even though we kind of opened midway into this range at the start of the week, midway into this range, price really didn't amount to much at all. We had kind of a nothing move up, and then price kind of pulled back down, hit this level, bounced off of it, obviously very, very strongly. We, in the past as well, we bounced really strongly off this level, and history kind of repeating itself as price once again bounces extremely strongly off of this level, and once again holds its resistance at this very important and significant 124.50 region that has been very, very active in creating support and resistance levels for price in the recent past, pretty much for the entire time that it has been consolidating over the past month or so. And once again, it held as resistance the last week as well. We sharply gapped down, kind of closed that gap almost in the following move, and then once again we gapped down again right around here. Once again, we try to close that gap with another gap, and so yeah, I mean, we really just haven't been very decisive at all this week, and which kind of just indicates that this is one market where liquidity has just completely sucked out ahead of the holiday season. And so really, beyond just the broader price action principles, the market still continues to be following as it should. There really isn't much to be analyzing for this market as of now. We do, however, obviously expect liquidity and volumes to plunge back into this market at the start of next year, and as liquidity and trading volumes kind of restore to normal levels. Until then, this market is pretty much one we're watching from the sidelines, really.